G'day guys, and welcome to the weekly VEMA Traded Market Scan. My name is Rhys, and today I'm going to be running you through the trades that we set up in the market scan last week. We'll see how they played out, if there's anything to do there, and then we'll go and take a look at Bitcoin as of today, see how it's looking, and see if there's any trades we'd like to set up for the week ahead. So what we'll do is we'll head to VEMA Trader and we'll get started. Righto, so here we are on the dashboard. You can see the 4 trades we had set up last week, and you can tell the state of them all pretty quickly. So you can see that 2 of them did not enter. They're still in the monitoring position. One of them was a loss. You can tell that by the fact it's closed and the risk reward pill is red. And then we still have one open position. It is quite heavily in profit, which is always good to see. And I've moved the stop loss into less of a loss, which is always nice when you can reduce your risk on those positions. So we'll start with the loss. So the loss was the long from Bravo, which was actually the one that I had cancelled and then reset up. And, you know, price did bounce quite nicely on the initial move into that zone and then proceeded to go straight through. So a loss on that one. Now we did reduce the risk on that to 0.5% because it was against the high time frame bias. So quite a small loss, but a loss nonetheless. In terms of what there is to learn from this trade, nothing really. I mean, there's always something you can learn, but in my opinion, there's really not a whole lot that I would add as a tag here. It was just kind of standard. Price moved through. It wasn't like I got caught by a wick, right? You know, and then price moved off. It was just a trade that went wrong. So I'm quite happy to mark this one as reviewed. And the 2 monitoring, there is one that I want to close. So we are looking at the cross of alpha here. So that whole idea was based on a bull flag. Essentially looking at alpha and then this zone forming a bull flag, and that was the cross of alpha looking for the breakout. Now that we've broken below the demand zone, I don't consider that bull flag valid anymore, and so I'm just going to cancel this trade because it's no longer what I expected that to look like. I do not want to be getting into position when we do, or if we do, cross alpha. The last one is the big short from right at the top from Charlie. I am going to close this. I was going to say I'm going to leave it open because I do still really like the zone. I'll put that back where it was. Do still really like the zone, and the reasons for shorting from there haven't really changed, but we're a long way from there. And so if price was to spike up here in the next week, the market would be doing things that I don't really expect to see, and so I wouldn't necessarily want to be getting into that short. So I'm going to cancel that one too. So that's now gone, and all that we are left with is the current position which we're in. So this one was a close below Charlie, a short close below Charlie, based on the break of this demand zone, part of the phase 1 strategy that we are currently paper testing. So you can see that's looking quite nice. So this morning, after this huge sell-off, I moved the stop down. So it's still not in profit, but it has massively reduced the risk. I think it's roughly about a third to a quarter of what it was initially. The take profit's down here. So I did speak about targeting that level potentially, but I still feel quite confident in this bottom 41,000 level, especially with how harsh that sell-off was this morning. We saw a pretty big sell-off when we did initially break down. Bit of a retracement, and then we've seen a really strong rejection. So I think there's a good chance, you can see based on this wick, we've eaten that demand zone as well. So that's pretty unlikely to hold, in my opinion. Now, there is still a 61.8 to break, but it wouldn't surprise me at all to see the 61.8, even if it holds with candle closes, to see a wick down to our take profit. So quite happy with where the take profit is currently. In terms of managing the trade, all I've done is move the stop loss. I did actually move the take profit earlier when I was just mucking around with some things, so I put it back where it was. So that's why there's a take profit moved in here, but it's pretty much, if it's not where it was initially, it'll be within a couple of $100. It's the same idea, front running that daily demand zone. So hopefully this trade will continue on to hit the take profit. I'll keep you guys updated. You'll obviously hear about this one in next week's update because I'll be speaking about it. If it's exited by that point, which I would think it should have exited over the next week, but we'll see. So that's it for last week's trades. What we'll do is we'll head to Bitcoin and we'll see what's happening for the week ahead. Righto, so here we are on the weekly, and again, not a whole lot to report on the weekly. That's probably going to be pretty common because you're only seeing one more candle for every weekly market scan that we do. So it's never going to be a huge lot of new information, but the interesting thing to note is we actually got an evening star. So the close from this morning gave us a bearish engulfing, which was coming after a doji, and then that was coming after a bullish engulfing. That is a classic evening star formation. And so that's typically a bearish pattern. It's a bearish reversal pattern. Doesn't mean that we're guaranteed to go down. To be honest, I still quite like the 50 fib at 51,000. Wouldn't be surprised to see us head up there at all, but definitely something worth paying attention to is that big evening star, potentially going to see some downside over the next couple of months. On the daily, things are looking pretty similar to last week. We've got our big bear flag that's still present. My high time frame bias is still bearish because we had that huge sell-off. Still in what is most likely a bear flag, right? You can't confirm a bear flag till it either breaks down and confirms it was a bear flag, or breaks up and it can still be a bear flag that breaks up, but until it breaks one or the other, you can't really confirm it as a bear flag, but it looks very much like a bear flag typically looks as it's forming to me still. So that's sort of the bias that I'm running with, is to the downside. The one thing that I have added is this supply zone. Now the reason I've added that is we've had a pretty harsh rejection, pretty big sell-off from that level. So my favourite zones, the ones that lead to market structure changes, we haven't had a market structure change yet. We may, it could come from here, but it's potentially going to take some time to get to where we'd see a market structure change. But for now, the fact that we've had a really harsh rejection, a really big sell-off from there, and also the fact that it has been retested and held, so you can see those wicks were unable to push through. So that's something that I quite like to see in a zone. So I'm definitely keeping my eye on that supply zone. I'll potentially use it as a target for longs if we have any trades set up in the long direction this week. That's it for me on the daily. We'll take a look at the 4 hour. Right, so here we are on the 4 hour, and pretty much the only thing to really note from last week is how strong this sell-off has been, right? We had a little bit of a pause there, little tiny retracement here. For the most part, all the action has been to the downside over the last week. So that's good in some sense. I mean, one, it's good for in that short. It kind of plays into reinforces my high time frame bias and this whole daily bear flag thing that I've got going on. That is quite a harsh sell-off with very little retracement. So overall, I'm still quite bearish on the market. That said, the very first trade that I'm going to talk to you guys about is a long. Well, the first two trades I'm going to talk to you guys about are longs. The reason is I love this 41k area. Right, I look at that and there's just a bunch of reasons for me that I look at that and go, okay, price may well reverse here. It might stop its downwards momentum and turn around for a little while, and I'm going to be able to get into a really good long position and potentially ride that for a little while. The reason I like that area so much is daily demand zone, 2 4-hour demand zones, and I'll speak about that as I'm speaking about the trades in a sec. A pretty strong 4-hour EQ. You can see it's been really, really nicely respected for quite some time. And the 61.8 fib of the move up all line up really well in that area. So I think there's a good chance we'll see buyers step in there. No guarantees in trading, but potentially could happen. And I want to position myself for that if it does. You'll see that I've noted the open position TP, so the take profit for that open position. The reason I've done that is VEMA only allows you to have one open position per symbol at a time. And so I want to make sure that these trades are only going to be entering once that position has closed, because if they're trying to enter and that position still hasn't exited, they're not going to enter, right? So I wanted to make sure that my entries were clear of that, so that they've got the best chance of entry. So the very first trade is a long from alpha. Pretty standard, no conditions. It is just price hits alpha, get into this trade. Risk management, we're going with 0.5% because it's against my high time frame bias. Just a fixed stop. So I have used a slightly bigger fixed stop than normal. Normally I just go just on the other side of the zone. With this one, I've actually gone clear of the daily demand zone, but more importantly, clear of this 4-hour demand zone that formed here and has been retested here. I wanted to make sure I was clear of that with my stop loss, because if price does hunt that second zone, just give me a bit of an extra buffer, and so will hopefully protect me if that is the case. So that's pretty much everything for risk management in terms of the journaling. Excuse me. So 4-hour demand zone, 4-hour EQ, daily demand zone is also there. Daily demand zone, and actually fibs, and the 61.8 fib specifically. Confidence in this one is a 5, just because of how harshly the market is selling off. I really do like this 41k area, but it is, you're fighting the market in these kind of trades, which is usually pretty dumb, but it is an opportunity to get a really good risk to reward sometimes. And I'm quite happy. So that is the long from alpha, or one of the longs from alpha. Now, this actually came up this morning. It's something that I've been meaning to record a video on for a little while, but it just isn't a priority of mine because there are some way cooler things that I'm working on. Isn't a priority of mine right now. Certainly will be in the near future. But this is a strategy that I've come up with that is, as all my strategies are, in need of a cool name, but it can help you avoid getting front run. So that trade on alpha is like my best entry, right? You can see that it's actually below the daily demand zone. So if we just wick and touch that zone perfectly, I won't actually be in that trade. It's one where I'm like, I want to get a really, really good entry on this trade. So my alpha is down there. What I've put in place to protect in the event that we do just beautifully touch that zone but don't quite make it to alpha and then come back up and confirm my idea and bounce from there is this position. So what I've done here is use a 0.45% distance to activate. So from alpha, 0.45% is about here. So if price wicks into that zone, this trade will be activated, and then a 1.1 distance to confirm with candle close. So what that is actually a closer back above that 61.8 with a 4-hour candle close there. So what I am doing with this position is ensuring if price just comes down to here and then moves back up and closes above here, which will really confirm that bounce from that area that I'm looking for, but it's front run my other alpha position, which gives me the better entry, then this position is going to get me into that trade. Now, I've actually dropped the risk management on this one to 0.25. And the reason for that is this is a test strategy. It's not something that I've actually gone and back tested. It's just something that I think is a cool way to sort of hedge my bets, cover myself a little bit in the event that I am right, but not as right as I usually like to be. I've used a fixed percentage stop loss for this one. Now, the reason I've done that is I want to make sure that this trade will be stopped out if price is going to come back down, because I would rather get into this alpha position down here. So by using a 1% stop loss, I have guaranteed, because price has to close 1.1% above alpha, I've guaranteed my stop will be above alpha in that scenario. I've got quite a high take profit there because I'm quite happy to target this 45k sort of level. And in terms of the journal, this is my avoid getting front run position, as always, in search of a better name. Pretty much the same tags as last time. The only one that is added is this is a test strategy because it's not something that I have back tested. I'm actually more confident in this one because it requires that confirmation. It requires that bounce to be showing before VEMA will even enter me into this position. So I've gone for a 6 and I am quite happy. Now, the other two positions that I am happy to take this week are both shorts. So they're both very similar, just straight up. If price gets to this level, I want to be in a short position, and 1% because 1% account risk because they are with my high time frame bias, fixed stop loss, fixed take profit, which is typically how I like to do my trades. And in terms of the journal, they're both very similar, right? We have 4-hour EQs that line up, or we're looking at Charlie right now. 4-hour EQ lines up really nicely with a 4-hour supply zone, and these supply zones are the ones that led to this break in market structure and this break in market structure. So I think that there is a good chance that they'll have, some strength if price is to come back up. Aligns with my higher time frame bias. We've also got this 4-hour trend line happening. Now, I do prefer to draw them off the closes, but in this case, those wicks are quite nice looking for a trend line there. So I could potentially see, price coming up here and rejecting, price coming up here and rejecting, that sort of thing happening. We're looking at 27th of April, so that's over the next month. But I want to have those orders in place in case we do see that retracement that I was saying we've been lacking happen really quick, and then I can potentially be in a really good place for a short. So I won't look at Bravo because everything's pretty much identical. The only thing to note on Bravo, I lied, I'm going to look at Bravo. The only thing to note is I made sure my stop loss was clear of Charlie, so that if price does push through this zone, I'll have been stopped out of Bravo before it hits Charlie. So that way that VEMA's not going to try to enter my short from Charlie and see that I'm still in the Bravo position and fail to enter that trade. So there you go. Those are the trade setups that I'm looking for this week. Now, the important thing to remember is always to hit submit when you want those trades to be saved. And there you have it. So hopefully you guys enjoyed this video. Hopefully you learned something, whether it's, how I do my entries so that I won't be in a position when they're hit, so that I can enter those positions, whether it's my tagging strategies, my risk management strategies, how they differ based on my biases, or whether I'm testing a strategy. Hopefully you guys got something useful out of this video. Have a great day, happy trading, and I'll talk to you guys very soon.